Patel Engineering shares have fallen by 19% this year. Does that make it an attractive buy? While the returns seem lucrative, but are the valuations justified? Well, this was a stock requested by you, so stay tuned till the end of this video to get your stock analyzed right from the fundamentals to competition and opportunities ahead. First up, the stock performance. As highlighted, shares of Patel Engineering have fallen by 19% year to date, especially in the last 6-month period. While if we check in the last 1 year and 3 year time horizons, the stock has gained just about 5% and 161% respectively. So to understand if there is an upside going forward, let's understand the business management and commentaries for the future. So what does Patel Engineering do? Patel Engineering is an infrastructure and construction services company engaged in construction of dams, bridges, tunnels, roads, piling works and industrial structures. The company has completed over 250 projects and has a robust position in the hydropower and tunneling segments. As of September 24, the company's order book stood at Rs 17,260 crore. Out of that, 64% is from hydro sector, 21% from irrigation, 10% from tunneling and remaining 5% from other sectors. Now this excludes the L1 position of Rs 240 crores it secured from NHPC for its Distap project. But onto the future bidding pipeline, the company has bid for projects worth Rs 10,000 crores that are currently under evaluation. Additional to this, projects worth around 40,000 crores have been identified and are expected to be available for bidding soon. This considering the 20% of conversion ratio the company aims to maintain, an order book of about 10,000 to 12,000 crore for the next year. Let's also address the big opportunity in the hydropower projects. At present, India has hydroelectric projects of 18 gigawatts currently under constructions. Projects worth an aggregate of 8 gigawatts are currently being carried out by Patel Engineering Limited. This brings the company's current market share to about 46%. A big focus area from the government is on pump storage projects. Currently, 60 gigawatt worth of projects are under survey and investigation. Some of these projects are already under bidding phases in which the company is involved in leading to this higher growth that we are looking at. Note that pump storage projects are essential for addressing the shortfall in the peaking power requirements of the country. Recent developments for Patel Engineering also include signing MOU, that's Memorandum of Understanding with Ircon International to explore other business opportunities. Coming to the financial picture, in the last 5 years, the company has reported a 14% of a CAGR growth, while in last 3 years, its revenue CAGR growth was about 32%. The margins between FY21 to 24 have remained in the 12 to 15% of range. Patel Engineering Limited aims to achieve this 20% year-on-year revenue growth from FY26 onwards, while keeping 10% of a revenue guidance for FY25. On the margin side, it expects to sustain this in 13 to 14% of levels. Now, Patel Engineering did go through financial stress 5 to 6 years ago. However, with consistent debt reduction, the company managed to reduce its total debt by nearly 24% to Rs 1,438 crore from Rs 1,886 crore as of March 24. The debt reduction plan involves primarily selling non-core assets. In the first half, it surpassed and achieved Rs 330 crore as against its plan to monetize Rs 152 to 200 crore via sale of these non-core assets in the first half. For next half also, the company is expecting around 100 to 150 crore of non-core asset monetization. But coming to the key risk, 90 to 95% of the order book comes from the government. Any delay on this would impact the business operations of the company. Along with this, the company is also in a highly working capital intensive business. Any risk on project delay or execution is another factor one should be watching out for. Onto the valuations, the company is trading at a P multiple of 16 times as compared to KNR Construction and HG Infra trading at 11 times based on its FY24 EPS. So what are your views on the stock and what other companies do you want us to analyze next? Write down to us in comments below and stay tuned to NDTV Profit.